Hello everybody, how are you all doing? I really appreciate all the engagements on the last video I made about my portfolio and Simple Trade review. It was fun to make. Also, it was one of my first videos I ever made, so was a little nervous. So I really appreciate all the encouragement and the comments, guys. I did get a few questions about overall dividend investing process, so I thought it would be fun to create more of a guide about dividend investing. This video would be perfect for anybody who wants to start their dividend investing or just started in 2021 or eventually will be starting in 2022. Although I would say, guys, this video is probably going to be a little bit longer, but if it helps you, please like it, and if you have any questions or comments, of course, please comment. So without wasting any of your time, let's just jump in and see what are we going to talk today. I'm going to talk about dividend stock versus growth stock. Then I'll share where do I buy my stocks. I know I have partially shared that before in the last video, but I might as well do it one more time. I always follow a 3 to 4 step process before buying or choosing any stocks. I'll share that too. I will also share whether I like more of dividend stocks or high yield ETFs. I will also share my 3 favorite Canadian stocks that I love them and I would love to have more of them. I will also share my 2020 dividend income that I had and also what would be my 2021 projected dividend income. This video is mainly for beginners who want to build dividend portfolio for passive income. It is not a get-rich-quick scheme at all, guys. It is long-term growth of your money. It is a well-proven method for investors who has patience to hold on to their stocks for longer and eventually build their own wealth. Just a small disclaimer to make, I am not a financial advisor. I'm just sharing my journey and a little bit of knowledge I have about investing, just totally for entertainment purpose. Okay, let's talk about dividend stock versus growth stock. So when a company becomes profitable, few options that they can do. They can either invest back to their own company, so all the profits that they got, they can invest back to their own company to grow it even further. This is basically called growth stock. So let's take Tesla for example. Whatever money they make as a profit, they are investing back to the company to make their technology much better than they are right now. And over the time, the share price also goes higher. So let's say we buy the stock at lowest as possible, and with time it grows and we sell it on top. This is basically a growth investing. Sometimes some companies decide to share part of their profits with shareholders as dividends, and this is called dividend investing. These stocks do not always grow faster, and dividends are typically an incentive for the shareholders to hold on to them for longer time. Let's take Ryokan for example. So Ryokan is one of the well-known real estate stock in Canada. Ryokan pays 8 cents per stock every month as dividend in 2021. Now, if I own 100 stocks of Ryokan, I will actually have monthly income of $8, which is kind of cool because if I keep increasing, so let's say I have 1,000 Ryokans in my portfolio, which means I will get about $80 per month as a passive income, which is kind of cool. And also I really don't have to worry about the stock price going up or down. So how often do the companies pay dividend? It totally depends on the company themselves. So it could be monthly, it could be quarterly, or even yearly. So for example, Ryokan here pays monthly dividends. Now, once you get the dividend, it actually gets deposited in your brokerage account. So for example, I use Simple Trade. So let's go back to my Simple Trade. So if you go to the Simple Trade and you go to the activities and you just select the dividends, you can see I got dividends from Apple, TNT, VDY, Ryokan. So there is Ryokan. So I got on May 7th, I got $17.76, which is kind of cool, right? So it got deposited in my available cash and I can use it to buy anything. Once you get the money in your cash account or whatever account you have in a brokerage account, that once you get the dividend, what do you do with that? So always invest back so you can maximize your investing amount. Now I want to take a couple of minutes and discuss about why do you need to do investing or reinvesting. So let's go back to this website called, let's go to Google. Let's go back to Google and type investing calculator. or investment calculator. Once you go there, just click the first one. Now this is very important, guys. This basically shows if you consistently invest your money, you can reach somewhere else that you cannot do it just by saving. So let's say you start with $1,000 and you have 25 years to invest. So early you start, better it is. I'm basically trying to show you the power of compound investing. And let's say the dividend income you get somewhere between 6 to 7%. So, and including the growth of your stock and dividend investing, you can easily get up to 10% gain. So I'm just gonna put 10% here. You're gonna compound annually, and you're gonna put, let's say, $500. So about 125 every week, which is not too much of a big deal for most of us. And if you want to know how to invest, how to earn about $125 extra, you can always do some small job, side hustle to get that $125. It's not tough at all. So if you put that and calculate that, so guys, by investing only $500 for 25 years, you can make up to total of $627,000. So now if you take that $600,000 and let's say you are 50, 55 or 60 and you have this amount in your bank, this is the minimum you can easily do. Let's go to the calculator and let's say $600,000. Now if you gain a 7% dividend that time, or 7% interest that time, or let's say even 5%, for example, 5%, I don't know what did I do, but you will be earning 30,000 per year. So if you divide that by 12, so your monthly income is almost $2,500, which is amazing. So you basically start saving and start investing from today, and after 25 years, doesn't matter when you start, as long as you're 50, 55, you don't have to worry about your pension anymore, and you'll be making 25. Of course, you'll pay some of in the tax, but still look at the amount. And if you increase the amount of money that you're investing to, so instead of 500, if you can do 1,000, you will be almost making $5,000 per month, which is great. So this is the main reason we want to invest in dividends. One quick thing we should know before going forward is, what does 5% dividend means? Which means if you buy $100 worth of a stock, you will get $5 as a dividend in the whole year from the company. So it could be that $5 is given to you among the whole 12 months, or it could be quarterly. So if the company gives a monthly dividend, so let's go to the calculator. So it's $5 divided into 12 months. So monthly you'll be getting basically 40 cents. So if you have $100 worth of the stock, you'll be getting 41 cents every month. Few important dates or terminology that we should probably know before you go forward, because we will be eventually coming across those anyway, so might as well know them. The first one is the declaration day. So this is basically a date when the company's board of directors, or the people who make the decision on behalf of the company, approve the dividend, and they basically decide when are you going to be getting the dividend and how much amount they'll be paying as a dividend. The second one is pay date. It is pretty self-explanatory. This is the day when you get paid. The X date is the cutoff date to receive the dividend. This is not complicated, but this is probably the most important one. So let's take an example. So let's look at this Ryokan dividend chart. So on 14th of May was the declaration day, which means the board of directors decided that they will be paying the dividend on 7th June. Now to get paid on that day, you had to buy the stock by 27th of May. So if you buy either 28th or after, you will not get paid on that day. You will be getting paid for the following month. To be able to get paid on this particular day, you had to buy either 27th or before. Hope that makes sense. So choosing the stock is probably one of the most important steps in dividend investing. One of the reason being, let's say you try to find out the stocks with very high yield. The problem is by the time you realize that they have stopped giving the dividends already, but by the time you realize that, it's already too late because the stock price has decreased so much, you actually lose your money. So one of the things you really need to do, you need to invest in a very, very good companies whose financials are good. So there are a couple of steps that I follow. So one of the steps is I use few websites just to screen some of the stocks first, and then once I have, let's say, 10 stocks or 5 stocks that I like the numbers in terms of dividends as well, not too high, and then I have to analyze them to find out their balance sheet and everything, that whether the stocks are actually sustainable in terms of dividends or not. So to screen some of the stocks, I use on Yahoo Finance this my screeners. So we go there and then I go to equity screener. Once you go there, you select Canada. You don't really need that. You can use, let's say, less than $10 stock. This is, I'm just doing as an example. You can choose and find the way you want to. Sector, I'm probably gonna use real estate for now. And then another thing I'm gonna use is that stocks those actually gave consistent dividends. So you can choose other things here as well. So let's say if they have the option here, so dividend, consecutive years of dividend growth, so actually increase the dividend over the years. Search. So these are some of the stocks that you can get an idea about and then do the research. So for example, I actually own this stock myself, so this is a good way. And once you find a couple of stocks and you go back into their financials and find out more details about it. So when you're looking at the financials, so you should first see how much cash or debt the company has on their balance sheet. So if the company has a massive debt and not too much cash in their hand, there's a big no-no that you should not go for the stock. Doesn't matter how big their dividends are or how much dividends they're trying to give you to attract you. Now there's another way of seeing things would be looking at the payout ratio. Now the payout ratio, most of the time you might be able to find on different websites, they already calculate. Now this could be average for the whole year, might not be at the same time though, for example for the month of May, but this gives you a good idea. So let's say a company gives 70% payout ratio, which means that if the company makes $100, 70% they are giving out to you as a dividend, and 30% they're keeping to run the company, which is still not too bad. But imagine certain cases, sometimes the company payout rate is 100 or even more than 100, which means basically they're using their debt to give you money to keep you and not reinvesting anything in their company. So those are the cases you really want to avoid. Instead of buying dividend stock, you can also buy another thing called ETF, which is basically exchange traded fund. I'm going to try to explain in a very layman terms. So when you're buying dividend stock, you're buying basically only one stock. So for example, you're buying only Ryokan, only Apple, only Enbridge, right? But when you're buying ETFs, you can actually buying a diversified portfolio already done by that particular company. So you can have, so for example, let's go to Vanguard S&P 500. So this is an ETF and which holds a lots of different companies, and let's say it says IT 26%, healthcare 12.8. so these are the percentage of different. That's how the diversification works. So that way you are still getting dividend, which might not be as high, but at the same time your portfolio is very diversified and the growth factors actually could be more. The positive thing about investing in ETF is you don't really have to do much research because you're paying that fee for it, right? Because they probably came up with the most optimum growth plus some dividend as well. So that way you're not doing any research, you're just buying it. Your growth, your dividend might not be as good as single stock, but you're still gonna have a really nice portfolio. Now I personally think that the dividend stocks, individual dividend stocks, are just much more fun to play with. Of course, there's much more risk involved, but at the same time, the gain could be much higher too. So as I promised that I'll be sharing my three most favorite dividend stocks. So the first one is Enbridge, the second one is Ryokan, and the third one is TD Bank. I'm not gonna go into much detail of these stocks right now because the whole purpose of this video is to give you overview of dividends in general. But I will be making another video explaining more about these particular companies. But one thing I really wanted to mention that these are just my favorites. Before buying any of these stocks, please do your own research. So we are at the last part of our video where I'm going to discuss about my 2020 dividend income and also my projected 2021 dividend income. So for that we have to go our Google Sheet where this is our dividend tracker 2020. As I already have mentioned that I have started investing in 2020, early 2020. So in January I didn't really get any dividend. So let's go up a little bit. So in January I didn't really have any dividend, and with February, March, you can see my investing amount increased, and I have started increased my dividend amount as well, and then eventually ended up with 91.37, which is a milestone for me in December 2020. And overall I have gained 372 as dividend income in 2020. Now if you see, my biggest dividend was from, let's find out, from $98 from Enbridge, $30 from AD, and Ryokan was $121. I did have TD as well that time. I gained about $25. I plan to buy more TD this year because whatever you do, banks are probably the safest. Canadian banks overall, are the safest way to go about it anyway. Now let's have a look at the dividend for 2021 also. Has been so far pretty good. So it's been about 4 months. So right now it's May 2021, and I always update my dividend. So as soon as I get a dividend, the same day or the next day, I try to make sure that I enter in my Google Sheet here. So this is another way of feeling good about your investment, that you are working towards your future. So January was $71, February 37, March was 100. This is the first time I have ever gained more than $100. These numbers are different just because some of the stocks are quarterly, some of the stocks are monthly. So I am increasing my dividend portfolio every month. As I said, I'm trying to invest roughly about between $500 to $1,000 every month. Please let me know that what kind of goals that you have. My goal is to end of the year invest 12,000, so 1,000 per month and 12,000 for the whole year, and eventually have a big portfolio for myself, or reasonable portfolio for myself. I was able to do it for 2020, and I think I'm pretty okay in doing so far for 2021 as well. Now overall in 2021 already I have made about $322, which I'm pretty happy about. So as of now, this is my total projected yearly dividend, which is $963. So if I do not invest anything at all towards my portfolio, and most of the companies, if they keep the dividend as right now, whatever it is, I will be getting roughly about $80.25 every month. I'll be getting paid. Of course, I don't plan to take those money out. I plan to reinvest all of them so that my total investment increases faster. And my goal by end of this year, so December 2021, my goal is to reach where my projected annual dividend would be $1,200. So on the average, I want about $100 per month. Now, please let me know what are your goals, guys. If you have any questions or suggestions for me, please let me know. I also wanted to mention that if you haven't started investing yet, and if you want to start with Wealthsimple Trade, which I totally recommend because I am with Wealthsimple Trade right now. If you invest with $100, as long as you use the link on my description, you get $10 to start with, so which is already a 10% increase right away when you start. You have a wonderful day, guys. I hope you enjoyed the video. Please like and comment, and I would be happy to make more videos like that. Thank you so much. Bye.